Hi there, my name is Ryan Hughes and I'm Head of Investment Research at AJ Bell. And today I'm going to be answering your questions on all things to do with portfolios, portfolio management and portfolio construction. So, how do I build a portfolio? Well, a starting point, I think, for building a portfolio is really to think about what are your objectives? What are you trying to achieve with this portfolio? It could be growth, it could be income, it could be a combination of the two, it could be preservation of capital. But also, you've got to think about what is your time horizon? How long am I thinking about investing for? Is it only a few years? Or maybe it's a really long time because you're thinking about your retirement and it may be 40 years to go. So those things will you need to factor in to how do I build a portfolio. But also, you then need to think about your risk rating. How much risk are you prepared to take? How comfortable are you with taking risk? Are you nervous about stock market falls and rises, or are you quite comfortable having a little bit of volatility? And that will shape your thinking around your risk rating, your time horizon, and your objective. When you've answered those questions, you've got a great starting point for how to build your portfolio. So, how many holdings should you have in a portfolio? Well, this is a tricky question because there's not really one neat answer, and it depends on how engaged you want to be in managing your portfolio. If you're really engaged, you love your investment research, and you want to build your own portfolio and manage it, you might be perfectly happy having more holdings there. But if you're not so engaged, and actually the world of investments is not something that actually excites you too much, and I can understand that for some people, you might want to have fewer holdings that's easier for you to keep on top of, or indeed you might want to buy a type of fund that does all of those decisions for you, much more of a managed package solution there. So I think crucial thing, make sure it works for your strategy. Make sure that whatever the number of holdings you have, you're comfortable that you can stay on top of it and make sure that every single aspect of the portfolio is working for you. So how often and how do I review my portfolio? That's a really, I think, crucial question and one that we get asked a lot. The how often point, well, again, I think it does depend a little bit on your circumstances and how engaged you are. But I would advocate maybe looking at your portfolio maybe once every 6 months, and it may well be that some people want to look at it only once a year. I certainly wouldn't advocate looking at your portfolio on a daily basis, on a weekly basis, because there the likelihood is that you could easily get buffeted by what's going on in the market, and you might end up making some very short-term decisions which could be quite costly. So how do you review your portfolio? Well, this comes back to thinking about what's your objective, what's your time horizon, and what's your risk profile. And reviewing your portfolio should be about looking at the strategy in respect of those three aspects. What it really shouldn't be doing is saying, well, that investment's not performed very well, so I'm going to get rid of that one. That one's performed really well, so I'm going to add that one in, because you'll end up in the strategy of what we'd say is buying high and selling low. Whereas, of course, you want the complete reverse. You want to buy low and sell high. So I would say don't review too often and resist the temptation to tinker and adjust your portfolio. Make sure you stick with the strategy. What should you do when markets become quite volatile? Well, here, I think it's very easy when we're reading in the financial papers or watching on the news, and they're always talking about markets are crashing and markets are going down, and they use all these emotive words, tumbling, crashing, those types of things. And what that does is generally it's human nature to get quite worried about these types of things and feel like you need to be doing something. When actually, more often than not, the best course of action is to do nothing. But it takes a really strong-willed person, I think, to do nothing when we see that level of turmoil and volatility on the market. But I think what it comes down to is going back to the plan. What are you trying to achieve? How long have you got to achieve that plan? If you're investing on a 40-year view because you're just starting out on your pension savings, whether there's a little bit of volatility on the market today, tomorrow, or next week really doesn't make any difference at all. So if we've got a long time for our financial plan to come to fruition, I'd say don't worry too much about volatility. If you've got shorter time periods, then make sure your assets are appropriate for your risk profile and your objective there. But above all, Avoid panic, because panic makes you make irrational decisions, and irrational decisions when it comes to your investment strategy are generally going to be quite costly. What's the best advice you've ever been given for managing a portfolio? That's a really good question. I've been investing and researching investments, managing portfolios for over 20 years. And there is one piece of advice that sticks with me that I was told by a fund manager right back at the start of my career. And that is quite a simple one. Be an investor, not a collector. And by that, what I mean is, make sure you understand the role that every investment that you have in your portfolio is playing. What often we see happen is that people buy different investments and they don't really fit together. You've got to think of your portfolio like a jigsaw. Each piece is building up towards a lovely, beautiful, clear picture at the end when you've constructed your portfolio. But the trouble is, when we see people that have become more of a collector, they've got these collection of random pieces of the puzzle that really don't fit together at all, and you've got no idea what the picture looks like at the end of that. So by thinking about what is each piece of the puzzle trying to do, am I putting it together correctly to build this jigsaw, to build the picture, then I think you've got a really good foundation to running your portfolio in a sensible way and hopefully ending up with the outcome that you need. So I hope that's all been useful for you to help answer these brief questions on where to start with a portfolio, how to build a portfolio, and how to monitor a portfolio. Look out for many more of these short, helpful intro videos on our website soon.